Welcome back to Curious Commerce, continuation from part 5 of working capital management. Now we will focus on three key features of working capital in trading business. First one is no production stage. Second one is fast turnover. Third one is trade credit is very important. Don't worry, I will explain each point with simple language and real life example. So stay till the end. What is a trading business? Before jumping in, let's quickly revise. A trading business is one that buys goods, sells the same goods, does not manufacture or produce anything. For example, wholesale shops, retail stores, grocery shops, mobile phone dealers, online sellers like Amazon, Flipkart. Now, let's see how working capital works in such business. The first major feature of working capital in a trading business is there is no production process. Unlike the manufacturing businesses, a trading business does not buy raw materials, does not convert them into the finished goods, does not incur production cost. So there are no expenses like factory wages, power and fuel, manufacturing cost, production overheads. Then what does this mean of working capital? Working capital is not blocked in production. Less complexity in the operations. Funds are mainly used for purchasing finished goods. Then, what is the meaning of working capital? For example, a retail mobile shop buys ready made mobile phones of different brands, sell them directly to customers. No manufacturing at all, right? Hence, working capital requirement is simple for understanding. Working capital requirement is simpler and lower compared to manufacturing businesses in trading businesses. The second important feature in trading business working capital is fast turnover. Turnover means how quickly money invested in goods come back as a cash through sales. In trading business, goods are bought, sold quickly, cash is recovered fast. Why is turnover fast? The question may be arise, right? Because no time spent on production. Goods are ready for sale. Demand is usually regular. For example, think about a grocery store. Goods are sold daily, stock moves quickly, cash keeps rotating. Money cycle look like cash leads to stock, stock leads to sale, sale leads to cash again. This cycle happens very fast in trading business. Therefore, impact on the working capital is less money blocked for a long time. Same capital can be used repeatedly. Third one is business can run smoothly even with limited fund. The third feature of working capital in trading business is trade credit. Trade credit means buying goods now and paying later. Suppliers give the credit period or allow traders for 30 days, 60 days, or sometimes 90 days of the credit. But why this trade credit is so important? Because traders buy goods on credit, sell goods quickly, collect the cash from customer instantly, and pay suppliers later. This reduces the need for own working capital. For example, a shopkeeper buys a goods worth 1 lakh rupees on credit, sells them within 20 days, received cash from customers, pays suppliers after 30 days. Business runs without using own money. But what are the benefits of trade credit? The first benefit is improved liquidity, reduce cash requirements, helps small traders survive, act as a source of working capital. That's why trade credit is called the lifeline of a trading business. Trading business has no production, working capital turns over very fast. Trade credit is extremely important because of these features. Working capital requirement is simpler, funds are used efficiently, business operations remain smooth. Now I will explain the working capital in service business with using three key features: low inventory, high salary and rent expenses. Third one is cash flow is critical. And we will understand everything with a real life example of a coaching institute. Let's begin. A service business is one that provides services, does not sell physical goods. For example, coaching institutes, schools and colleges, hospitals, saloons, IT companies, etc. In a service business, the focus is on people, skills, and expertise, not products. The first major feature of working capital in a service business is low or no inventory. Service businesses do not keep large stock. They do not deal in goods. They do not need warehouses. There may be some basic materials, but inventory is very limited. For example, coaching institute does not sell any physical products, may only have study material, books, and stationeries. Compared to the trading or manufacturing businesses, this inventory is very small. But how the impact on working capital will be takes place? Very little money blocked in stock in the case of the service businesses, lower storage cost, and less risk of loss of damage. So, inventory is not a major component of working capital in service businesses. Second one is high salary and rent expenses. This feature in service businesses, people are the main assets. Service industries expect the skilled employees, or the skilled employees are required for the service industry. Fixed monthly payments are high, especially in the service industry. And the same way, the major expenses include, if you consider as a education, tutorial or the tuition center, In the case of the coaching institute example, the coaching institute must pay teacher salary every month, office staff salaries, rent for classrooms, electricity, internet, and maintenance. These expenses are fixed and regular whether students pay fee or not. But the impact on working capital is continuous cash outflow, high dependency on monthly collection, and working capital requirement is more for expenses, not stock. Hence, managing salaries and rent is a key working capital challenge. The third feature is cash flow is critical. The most crucial feature of service business working capital is cash flow is extremely important. Service businesses cannot store services, cannot sell later. If today's service is missed, depend heavily on timely cash inflows. If cash does not come on time, salaries cannot be paid, rent may be delayed, business operation suffers. It's the same example, the coaching institute. If students delay paying the fees or pay in installments or drop out in the mid course, but the institute still has to pay salary to the teachers, pay the rent, pay the electricity bills. Even a profitable institute can face problems due to the poor cash flows. The impact on the working capital is regular fee collection is essential, advanced fees improve liquidity, cash planning is more important than profits. That's why cash flow management is the backbone of service businesses. Let's quickly summarize. Service businesses have low inventory, salary and rent expenses are high, cash flow is critical for survival. Using the example of a coaching institute, we saw that money is not blocked in stock, expenses are regular and fixed. Cash inflow timing decides business success. Thank you all for daily updates. Follow WhatsApp channel Curious Commerce Financial Management. The working capital management will be continuing in part 7. If you like this type of the videos, share, subscribe. Thank you all.